can just type in notes while we're going along. I can keep track of those too, of anything that they'd like an expansion on.
Okay. Yeah, we'll try to keep the chat room monitored as well. So if you don't feel comfortable talking, then type in the chat, and since it's 12:03, we'll go ahead and get started. I'm John Anderson. I am the Executive Director at Level 2. We're a nonprofit co-working center and entrepreneurship center here in Plainfield. And then we're on with Daniel Kinnaman, who is a local CPA and accountant. And Daniel, you want to talk a little bit about yourself real quick?
Just a local CPA, not located that far from you, over in the Jaeger building across from Kohl's. And a lot of new things to discuss in this, and a lot of re-ups and clarifications of things from the first bill. And Jared, while you might not want to do lunch, everybody will be seeing me drink coffee.
And me drink water. Okay, all right, well, let's go ahead and go ahead and get started. This is going to be in two segments. Again, if you want to put something in the chat, go ahead, or raise your hand. I'll try to see that as well. But the two segments are, we're going to go over personal stuff first, and then we're going to move over to the business part of it. So first off, the bill was a $900 billion relief package included in a $1.4 trillion omnibus, which is a budget plan. So about $2.3 trillion total. A lot of stuff. That's why the bill was so long. That's why there's a lot of stuff in it that we're not going to talk about today, because it does not pertain to you. But first off, I'm going to talk about the economic impact payments. They actually, according to the Treasury Department, started hitting bank accounts last night. And that's $600 per person in a family, but that includes eligible dependents. That's if you're 17 or under 17. So you have to qualify for the child tax credit. So if you're over 17, if you have a dependent over 17 in your house, they do not qualify for the additional $600. Also, there's phase outs. So if you're an individual, the income phase out starts at $75,000, and then it goes up for there. It's phased out at $5 for every $100 above the adjusted gross income limit. That phase out's $150,000 if you're married filing jointly, or $112,500 if you're a head of household. So that's a pretty brief overview of the economic impact payments. The $600, as we discussed before earlier, there was a bill that passed the House that allowed that to be $2,000 per person. It has not reached the Senate floor. Actually, the Senate actually tied it to a couple other things, so we're not really sure if it's going to pass or not. But the other thing that bill did in the House was it included dependents or it took off the fact that it's a dependent. So the $2,000 would include anybody in a household. Well, not necessarily anybody, but eligible children. Again, that did not pass the Senate. I'm sure it'll change if it does, so don't worry about that right now, but that's just what's going on over there, kind of the sausage being made. Next, we've got unemployment benefits. There's three parts to this. The first part is it extended unemployment benefits for an additional 11 weeks. Here in Indiana, the unemployment benefits, I believe, are 26 weeks. So that would extend it for another 11 weeks through March. The other thing is it added an additional $300 onto the unemployment benefit. So our max benefit here in the state, I believe, is $390. It's 47% of your wages. So it's an additional $300 on top of that, provided by the federal government. And that will go through March 15th. They also extended pandemic unemployment assistance, PUA, which allows for gig workers, independent contractors, self-employed people to apply for unemployment, which has not been allowed previously before the CARES Act in Indiana. So if you're self-employed, don't have employees, you can get that. Also, a new part of this bill that wasn't in the CARES Act is if you have multiple incomes, like you have a W-2 and maybe you're a gig worker, maybe you drive for Uber, or you have some type of 1099 income of up to $5,000, you can actually get an additional $100 per week on top of that. I was just on the Department of workforce development webpage today. They still have a lot of things that they haven't typed up. They said they're waiting for the Department of Labor to get them the regulations on it, but you can see that. Hopefully we'll see that soon. I mean, obviously it's a holiday week, but hopefully we'll start seeing some of that happen. I know the whole unemployment thing was big for self-employed people, because there's a lot of people who are self-employed who did not get unemployment insurance before, but were impacted due to the COVID-19 pandemic, and so they would qualify now for the additional insurance through March 14th, I believe, and then the PUA is good through April 5th. Again, it's all 11 weeks. So from 27, you get up to 37 weeks, from what I've read. Daniel, you have anything on that?
That's correct in its explanation.
And then the other thing is there will be new documentation needed. Again, we don't really know, but you have to certify that you're self-employed. That wasn't in the CARES package. I haven't seen anything from the Department of Workforce Development, but that'll be probably specific to Indiana. Every state will be specific to what they'll have, but it's just to keep down on some of the fraud that we saw with a $600 PUA amount. Going on past unemployment benefits, we're just going to hit on we're going to go through real quick on charitable deductions. Hold on. Okay, we're going to go through charitable deductions. So in 2020, there's a $300 above the line charitable deduction, which used to be you had to itemize to get, which after the tax cuts of 2019, I believe, was it 2018 or 2000? I don't even remember anymore, but made itemizing more difficult. So only about 80 or 20% of the population itemized. But now you can have a $300 above the line deduction on your income, and that's for single or married filing jointly. So they call that a marriage penalty. But for 2021, they actually bumped that up to $600 above the line deduction. So you don't have to itemize to get that. So if you give to a church or another 501c3 organization, you can use that to offset some of your income. Also, for the charitable deductions, used to be you could only get up to 50% of your adjusted gross income. Now you can get up 100%, but I don't know if that really affects anybody here. That's a pretty high bar to make. I don't know if anybody's giving 100% of their adjusted gross income to charities. But if you are, level 2 is looking. Sorry, it's a joke. The other thing is meal expenses for 2021 and 2022 for small businesses, meal expenses from qualified restaurants. Still waiting for guidance on what that is. They'll be 100% deductible instead of 50%, I believe, Daniel, prior to. So that's not retroactive to 2020, but it's for 2021 and 2022. A couple other things. The FSA, the flexible savings accounts, if anybody had any money left in there, used to be you could only roll over a small amount, $500-ish, or you could only have 2.5 months to spend it. But now you can, because a lot of people were off or working from home and didn't have daycare or childcare or whatever, then you can now roll your 2020 FSA into your 2021 so you don't lose it. And you can actually, there's another provision that allows you to roll 2021 into 2022. If you have an FSA, a flexible savings account, a flexible spending account, then talk to your employer about that to make sure they don't forfeit the money that should be rolled over into 2021. So that's quick about that. And then, some good news about the FAFSA. That'll be streamlined in 2023. So you have 3 years to look forward to that. And then finally, I thought this was pretty cool. It was in the CARES Act, but it's been extended through 2025. But employers can now pay tax-free $5,250 per employee of student loan expenses, and that's principal or interest. So that's pretty cool. It's a benefit that if you're looking to hire younger people, it's a great benefit that you can have instead of giving a raise. It's not taxed, and it's tax deferred for the employer. So that's a great thing in this bill that will hopefully help some people with some student loans. So that's that's a brief, quick overview. Yeah, Schedule C. Daniel, is that Schedule C for the unemployment insurance that we're talking about?
Yes, so that's what the state for my clients that were unemployed, or I'm sorry, self-employed, was asking for, because a lot of them, if you don't have an S corp or something like that, they don't necessarily have a payroll that the state was seeing on a regular basis, so they just ask for Schedule C.
Perfect. And hopefully most people have that from 2019. I'm assuming the Schedule C from 2019.
Yes.
Yeah, so if you have your Schedule C, most people should have it. That's what the state was asking for. Thank you for that, Daniel. I appreciate that. Now, PPP Part 2. This is not a second draw. We're not getting there yet, but we're just going to go over PPP Part 2. Some additional funds were put towards the first program for those who were not able to qualify for it. Maybe they ran out of time. Maybe that they had to pay it back, or they thought they might have to pay it back, but then their business was hurt again. So this is PPP Part 2. One of the big things, and I'm going to let Daniel talk about this in a minute, caused a lot of hullabaloo, and understandably so, because a lot of people brought on employees just to make sure that PPP was forgiven, and they might not have been able to work. But the PPP, the money used for the PPP, is now fully deductible, which the IRS kind of gave us mixed signals on that before, but now it's fully deductible. So Daniel, you want to talk about that a little bit?
So I'm going to go through a little bit of the PPP and expand on both the original language and then also expanding to a quote unquote second loan. So both PPP that is forgiven under normal situations, forgiven debt is considered taxable income. And if you qualified and sent in your PPP documentation, it will not be taxable income. So let's say you had $50,000 PPP, your business had $150,000 of revenue. We would, with PPP being 58,000 of that, we would subtract 50,000 right off the top, as long as you had filled out the proper paperwork and asked for forgiveness of that. Then expanding on PPP, there's going to be a second round of PPP, and it is, I want to say it's materially different than the first round in that it targets small businesses. A lot of folks were upset with the Boeings and these huge companies getting PPP the first round. So all publicly traded entities are not eligible for the second round of PPP. You can get a second round even if you qualified for a first round, as long as your first, second, or third quarter, and the language right now reads that any of those can be independent, not cumulative, was down by 25% in revenue. You have less than 300 employees. You can apply for a new PPP up to 2 million, which is down from the 10 million max the first round. So they're trying to target small businesses better. A couple of industries were hit specifically in this one and treated better. And I think it makes a lot of sense if you think about the businesses that were hurt. Hotels and restaurants are now eligible for 3.5x or 3.5 times their monthly payroll, where the original amount of PPP was 2.5 times your monthly payroll. All other businesses are still eligible to apply for a second round, but it's at the 2.5 monthly payroll. Jennifer, I saw you were on, and I did not see anything to say if your industry was in there, but I think it might be in the 3.5 range, not the 2.5. If you need to, just text me afterwards and I can follow up on that, looking to see if we can drill down. Other things that were hit was live venues. So theaters like are hit. Think about places that do plays, all those type of businesses got a big grant, because in essence, we've told folks, we don't want you gathering in big groups in person. So those businesses were pretty much shuttered for the last 9 months now, and probably for a little bit going forward. Any child care providers, and I don't know if the chamber has any that are members, they have a special $10 billion blocked out for grants because a lot of people that stayed home no longer sent their kids to child care. So child care businesses were hurt much worse than the some of the other businesses out there. I don't know if anyone took it. I encouraged my businesses not to that I work with, but there was a deferral of FICA taxes for the employee up through April 15th. That has now been extended to not April 21st, till the end of 2021 to repay that. A lot of government employees, especially federal government employees, were forced to take it. Other than that, I don't know too many businesses that did that one. We talked about the non-taxable PPP. EIDL is non-taxable by definition. It's a loan. We've now got the simplified application increasing from 50 to 150. Anybody that took an EIDL loan, there's been an automatic 1-year waiver that you are allowed to apply for so that you don't have to start repayments. So if you took an emergency disaster relief, your business is struggling, you can apply for a 1-year deferment before you start repaying the EIDL loan. And that's probably the other big items. Is there any specific questions that folks have, or?
Well, just to add a couple things, and I don't know if you touched on this, Daniel, but the grant offset some of the forgiveness for PPP prior to. Now, if you got an EIDL grant it was $1,000 per employee, that does not offset your PPP forgiveness. The other thing is you talked to Jennifer about if her business qualifies. That's an NAICS code of 72. So if you're in NAICS code of 72, and I don't know what yours is, Jennifer, sorry. But if it starts with 72, that's when you qualify for 3.5 times monthly payroll, average monthly payroll of 2019. And the other thing, and I'll talk about this in a little bit, but what's retroactive for 2020 is if you got the PPP, you can now qualify for the employee retention tax credit, which is huge, and they're gonna actually make it even better in 2021. But I think those were just the things. The other thing is they updated payroll costs. So if you have group life, group disability, and things like that, those are included in payroll costs. But nope, I think that's it.
Expanding a little bit about other things that they included. The original PPP in their original charter language said that payroll had to be, I want to say it was 80%. They then dropped it to 60%. But in that 40% of other allowable expenses were a lot of the expenses that you would see to move an employee from a office building to a home. So you're allowed to do cloud business, cloud storage, a lot of cloud services, a lot of technology. So think about traditional, what do you need to work from home to be the same as an office? If your company had to pay for those type of expenses, that's included in addition, not just rent and utilities, which were the big two from the initial bill.
Did you guys touch on the covered period, the 8 to 24 week, Daniel? Now you have the option of 8 or 24, as before it was just loans prior to June 5th, I believe, is what it was.
Correct. The 8 to 24 week is also the coverage period. It just makes it a lot easier, as I've helped some clients fill out forgiveness to say, we took the loan, here's the forgiveness period, by looking at payroll over a 24-week period, it just made it much easier for the payroll portion to qualify, because you might be down but not have used all of it in an immediate period if you temporarily lost an employee, then regained some employees. And they're being a little bit more forgiving. Originally, for the PPP, you had to have retained a certain percentage of your workforce Now they're being a little bit more forgiving, understanding that some people or the change in business situation didn't allow it for it. That's more of a case-by-case definition.
I know that's a lot, everybody. So if you have any questions, you can take yourself off mute and ask them, because I know the PPP part 2 was a huge thing. There's only one other thing that I really want to talk about. That's the employee retention tax credit. So if you have questions about the PPP, let's go ahead and ask them now, so you don't forget them, and then we can move on to the employee retention tax credit.
Hey, Daniel, John, this is Jared Wade. Daniel, thank you so much for popping in here and chatting with us. Only major question that I had was, if we applied for the PPP before and we were accepted, I know that you touched on the fact that you could reapply. My bank, I bank through Huntington partially. I've been transitioning to a new bank, but I've stayed with Huntington until this whole PPP process is completed. They've been emailing me about once a month saying, hey, they haven't released the new way to repay or how to, process that to file the paperwork to show that you used it in the correct fashion. Is it advantageous or wise for me to try to apply again for PPP now, since I haven't been able to process or file for anything for the first wave, or should I just hold off and don't even do it?
Let me rephrase your question to make sure I am answering it correctly, and then I'm going to potentially expand upon your question, okay?
Great.
So you were not able to get the first round, or you've got the first round, but you have not been able, they've told you that they don't have the documentation needed to do forgiveness yet.
Correct. So I applied for the PPP. I was granted the first round of PPP. And for the last 5 or 6 months, I've been receiving an email once a month basically saying, hey, and this is very much a paraphrase, but hey, they have not released the paperwork in order for small businesses to file for the PPP forgiveness. So I have not been able to file for that forgiveness element. So ultimately my question is, do I try to go for the second round of PPP with the knowledge of, hey, the first round hasn't even been really fully forgiven yet because the paperwork hasn't been processed?
Okay, so I'm going to answer both of those questions. First of all, I've seen this with Huntington, but I've already have had multiple clients that I've helped them fill out their paperwork and they've been forgiven their loans. So that's really a Huntington issue, not a banking issue in general. And hopefully Huntington's not a member of the chamber as I say that. I've seen it with one of the First Bank of Indianapolis and Huntington are the only 2 banks that are saying that you cannot apply and that they don't have the language. I actually have the form saved on my computer to apply for forgiveness. And I've had clients at Huntington that have filled out the form, sent it to their Huntington agent, and their Huntington agent has then applied for forgiveness. So I think that Huntington and First Bank of Indianapolis may just be overwhelmed right now. I don't want to talk to their back channels of doing SBA business. The second thing is, if to apply for the second round, you have to have, and I'm going to assume that the vast majority of members of the Plainfield Chamber do not have over 300 employees. So Jared, if you do not have 300 employees and your business dropped 25% of revenue, then you can apply for the second, regardless of whether you received a first round or not.
Perfect.
And there is potential language that the second round will be forgiven in the same manner as the first, but that is not concrete as of this moment. And we waited up until mid-November to get firm documentation from the IRS and Congress that the first round was going to be forgiven. And they did spell that out specifically in this second stimulus bill. As long as you did the things that qualified.
Jared, I've got just a couple things to add to that. If you want to wait, the SBA has 10 days from Sunday to send out the new forgiveness application or show us the new forgiveness application. Daniel thinks that it might be what the 50,000 easy application looks like, or it's not the easy, it's the other one, isn't it? Anyway, what the current application for loans of 50,000 and less might look like. But then you can just fill it out and send it in, and you just have to have had spent or are going to spend your first draw or your first PPP loan to qualify for the second one.
Okay, perfect. I'll reach back out, and I don't want anybody to think that this was like a slam on Huntington. That wasn't my ultimate goal. It was just the emails and the communication that I've received has basically said, hey, we, as in Huntington, have not received any information in regards to how small businesses are going to be processed. And we, again, Huntington, believe that it's going to be a simpler process for small businesses like yourself. So Daniel, I'm the only employer. I don't have 300 people. I'm in the special events industry. So losing 25%, check, not a problem there at all. So I just wanted to make sure I wasn't going to cross any lines that I shouldn't be crossing if I applied for the second round.
My understanding, John, and I'll go slightly different, is that your first one did not have to be finished in order to apply for the second round. But I think that's a Huntington thing. And Jared, I will type an email in here. And if you want, just hit me up and I will send you the actual form for forgiveness that all the other banks are using right now and that the SBA has issued. And then I have had members of Huntington send that to their SBA officer, and the SBA and Huntington was suddenly able to process it.
Gotcha. Thank you so much, Daniel.
Speak to Chase. I haven't had any Chase comments on that.
Perfect.
Yeah,
Thank you so much.
We had somebody say that Chase is the same way. So, I mean, some banks are tough, and they were trying to push forgiveness back. So maybe this is Huntington's way of trying to funnel the applications. I don't really know.
I know State Bank of Lisbon, Hendricks County Bank and Trust, Old National. Those three banks I have specifically filled out documentation for forgiveness, and my clients have been forgiven already before the end of the year. Well, I guess we're still before the end of the year. I'm looking down there, but sorry, tax accountants bounce back and forth between days. But so I have a hard time believing that if First Bank of Lisbon can get it processed, that Chase or Huntington cannot.
But the State Bank of Liston is an amazing bank. So sorry, there's a plug for them. Any other questions about the PPP re-upping or PPP second draw? Hearing none, I will move on. Daniel, sorry, were you going to say something?
No, Brad, do we have any daycare providers or anybody like that inside the chamber?
No, we don't at this point.
My kids are old enough, I don't look anymore.
Yeah, we don't at this point, no.
Okay. I was just going to say there's some specific language there, but I'm not going to talk to it if not. And if it came across your desk, they can always just be shot to me for a free discussion of what that entails.
Sure.
Okay, and moving on, the last thing that I want to talk about is expansion to the employee retention tax credit. Now, the main thing, one of the top things, and I think I touched on this before, but if you previously in 2020, if you received a PPP loan, you could not also apply for the employee retention tax credit. Now you can. So retroactively, you can apply for the employee retention tax credit. Now, what is that? Well, it's two different rules after this new law. You have the 2020 rules, and then you have the rules that start in 2021. So let's cover the 2020 rules real quick. 2020 rules say that you qualify if your business is 100 or fewer employees and you had a revenue year-over-year quarter miss. So let's say second quarter of 2019 or 2020 was 50% less than it was in 2019. So you dropped 50% in your revenue in a yearly quarter, and that could continue on until you're up to, I believe it was 80% of your previous year's revenue. And they also did up to $10,000 per year in employee retention tax credits, and I believe the credit was 50% of of wages. So if you have 50% of wages, then you could qualify for a credit of up to 50% of wages. Now in 2021, they've changed the wording to where if you only had a 20% drop in revenue, you can start the program. So you don't have to have the 50% drop in threshold that you had prior to. You just have to have a 20% drop in your, I think it's gross receipts is how they say it. You only have to have a 20% gross receipts in a quarter over quarter comparison. And this is from 2019. So let's say first quarter of 2021, you had a 20% drop in receipts from first quarter of 2019, then you can qualify for the employee retention tax credit. Also, you instead of 50%, you get up to 70%, and instead of 10,000 total, it's 10,000 per employee per quarter. So you can get a credit of up to 7,000 per employee per quarter, because that's 70% of 10,000. So this is a big thing. If let's say in 2020 you're still 20% down, or 2021 you're still 20% down from 2019, then you can qualify for this employee retention tax credit. So I think this is a pretty cool thing. Not a lot of people are thinking about the PPP. They weren't thinking about the employee retention tax credit. Also, if you look back in your 2020 years and you saw a 50% drop, and maybe you had your PPP for a different quarter, then you can use the employee retention tax credit for 2019 over separate quarters. You can't use PPP and the employee retention tax credits for the same wages, right? So the PPP is good for 8 weeks. So your employee retention tax credit has to be a quarter that's not within those 8 weeks. And you just, how do you know all the money comes from the same place? We just try to earmark it in your account. Like, this is the PPP money, this is what I spent it for. And then this is the employee retention tax credit. I spent it for this particular quarter when I was down 50%, and I continued until I was within 81% of previous year's revenue. So can you apply for the PPP and unemployment? No, you cannot. And I didn't see any language in this bill. Daniel, maybe you could help me that changed that. But prior to, if you received unemployment, you were not supposed to get the PPP forgiveness program.
That is accurate.
So I have not seen any language in this new bill that would change that. So I guess you just have to do the math in your you talk to your accountant and do the math to see which one. But since the new unemployment is only $300 additional per week, I don't know if it will benefit you. It just depends.
Other than lower wage employees, the $300 tacked on to your 40% credit from the state is most likely not going to be as good as 100% PPP.
Plus, it's taxable. Unemployment benefits are taxable, whereas the PPP
Correct.
has not been.
Yeah. So it's going to be a little bit more limited. I have directed people towards the PPP just because of the nature of the forgiveness.
And I know that was a quick over the employee retention tax credit. There's a lot of information on it on the IRS website, not the new 2021 version, but the 2020 version. Also, guys, a lot of these things, the SBA is going to have to come out, and the Treasury Department is going to have to come out with regulations. So they have a set amount of time to do that. And I will send out information. I'm sure Daniel will let his clients know as well as it becomes available. So like when the new forgiveness or simplified forgiveness for loans of $150,000 or less comes out, I'll let everybody know if you're in our email newsletter. And as more and more of these guidelines, because this bill was just signed into law on Sunday, as more of these guidelines hit the tape, we will keep people informed.
Yeah, on my Facebook page, I published the 30-page Cliff Notes version of the 5,000-page bill. Let's be honest, I read pretty quick, but I can't read 5,000 pages in 2-3 days. And I don't think all members of Congress, SBA, et cetera, have either. There's going to be clarifying language, and I'd expect that to continue through tax day. And I expect that there will probably be even more extensions this year just because of what's the clarifying language on some of this stuff.
Do we have any other questions from the peanut gallery? Any other thoughts? Oh, I guess the other thing, Brad, since you're here, 501c6 organizations are now qualified for PPP. You don't. It's not the PPP Part 2. It's still the PPP Part 1. So you qualify for the changes or the same rules of PPP Part 1 that were passed back in March, end of March, I believe.
Yeah, we contacted our banker immediately to find out what we can do with that and see what we can do with it. So we're certainly on it for sure.
There is a specific amount that was actually put in there for not-for-profits, separate from the 285 billion that they did for small businesses. I can't remember the number, but there is a dollar amount that is earmarked for that.
Yeah, it'll be interesting to see. Just happy to be included this time.
I know there was 25 billion earmarked for small businesses of 10 or fewer employees. I don't know if that's first draw or second draw or all combined, but there's a lot of numbers in there. So yeah, forgive us if we don't know that full.
Well, from what I've seen, there was a lot of applications out, but for the most part, there's still money available from first round that hasn't been used completely yet on the EIDL portion, not the PPP portion. And there is additional money for an additional second round of PPP.
Yeah, and that's a good point, Daniel. The EIDL grant, they added 20 billion to that, but you don't qualify if you're not in a low-income area, and there's not a whole lot of low-income areas around where we particularly are.
EIDL, clarification, EIDL, all you have to show with this is that your business was impacted.
Right, but I'm talking about the grant.
Okay, the grant, sorry. I was going with the loan, my mistake.
Yeah, the new advance payments, which was $1,000 per employee before, up to $10,000. Now it's a lot harder to qualify because you have to show that you're in a low income area. There's maps involved. You have to put your address in a map to see if you're in a low income area. Here at the mall, we are not. I don't know if you guys live at the mall, probably not, but you put your address in to see if you're in a low income area to see if you might qualify for the new EIDL grant.
Yeah, I think it might be done on a county-wide basis, which is typically what those are done. And Hendricks County will not be considered a low-income county. Some of the western counties or southern counties in the state might fall into it, but Hendricks definitely will not.
There you go. All right, well, I want to thank Daniel for his time. Thank all you guys for your time on a holiday week where a lot of people are not working. If you guys have any questions, feel free to reach out to Daniel or myself. Daniel is the professional here. He's the accountant. I am not an accountant. I just play one on Zoom calls. I don't do that either. But if you have any questions or concerns, let us know. Again, we're happy to have you guys. Daniel, you have anything else to add?
For most of this, and I'd always say, because companies and people can feel embarrassed at times, send me a quick email if you want. There's nothing to be embarrassed about. The pandemic hit a lot of businesses really hard. I'm more than happy to answer a quick consultation question.
And Daniel put his email in the chat, as well as a link to the employee retention tax credit from the IRS. Thank you. That was very, very nice, Daniel. Well done. Other than that, everybody have a happy and healthy 2021. And I guess that's it.
Thank you, everyone, for showing up.
Thank you, Daniel.
Thank you very much.
Thanks, Daniel.
Wait,
I had
Jared
one
got a
question for you, Daniel, but we can do it after we get off of live. We don't have to be live for it.
You did see my email show up, Jared?
Yeah, this hopefully will be a really quick question for you.
Okay.
All right, let me stop recording.
Oh, you're fine. You can.